Okay, so we should be back up. That was about. That was weird.
Yeah, because we didn't have difficulties last week. It was just
At
fine.
all. It was saying that there was an issue with the drop off with YouTube. But we're back.
No, my little sister is texting me. She was
She's
like,
like,
"What
where'd
short
you
episode
go? Where'd you go?
today?" She was like, "Short episode today."
Yeah, we back.
See the sign, Mark.
The sign. Oh God.
We back, baby.
Well, that's dope. Okay, so we're back up and going. That was weird. That was like
That
very,
was.
very weird. But I've been seeing that happen across the board. Like YouTube has been giving out significant issues as of lately. So, yeah.
Reggie said, "We back and we better."
All right, so we're back and we're better. Let's just go ahead and get through it because we don't know what Google servers are ever like. You know, if only they were using AWS, but that's a whole different ballgame. All right, so let's talk about this market, shall we? So where should we begin? Should we begin with questions? Should we begin with charts?
I like to begin with the charts.
Of course you do. Thoughts on the market? Okay. Okay, so let's send it off to presentation, shall we?
Yes.
And boom, here we are.
They're saying your volume is low, FYI.
My volume?
Well, compared to mine. They're saying compared to mine.
I mean, that's probably true.
I'm hella loud, so.
Yeah. So, all right. So we have Micron on the screen, but I wanted to take people through something because you're seeing a little bit of different materials on our screen that I wanted to start sharing with you. And these are going to be basic cornerstones that we should be able to look at. So I think I talked about it last week where you're going to see the 3 EMAs, so exponential moving averages. So essentially you have your typical moving averages. And then on top of that, you also have your exponential moving averages. Now, the exponential takes into account your simple moving averages, but does some other dope math that sits on top of it that gets it to be a little bit more precise. And what do we mean by that? So, for example, if I was to pull up, give me SPY ETF. This is what it looks like when you have the exponential moving averages because it takes into account different periods of time as it's drawn out. So the thing I like about exponential moving averages is one, it kind of shows you where the trend is going, and it gives it to you in it gives you in a better accurate format versus your standard moving average. It's just like, okay, hey, it's just pretty much an average of number based upon a certain subset as it pertains to time. So here we can see that we have built onto my chart. I'm going to reveal it for you. Drum roll, please. We have what is called the 3 EMA. So we have the 5 close, the 21 close, and the 50 close. Then, of course, we have a chart here that tells us about the volume activity, which is pretty interesting because we're starting to notice on a daily. This is a daily chart for year to date. So for anybody out there, on a daily chart, you're starting to notice that we're coming down in volume again. So which is pretty interesting because we're just kind of like grinding our way up to the top in the S&P 500. Now, I know that some folks are like, hey, Mark, instead of showing us the S&P 500 ETF, just show us the SPX. So there you have it. There's your index. Same thing, but I mean, boom. So if you notice, we're kind of like just at the way of grinding it all the way out to the top just to essentially get to those record highs. We're so close. And I would say, honestly, the number that everybody needs to be watching, and I'm going to just do some wonderful chart stuff here, just put on a horizontal line, is really watching us when we get to the 450, 4,510 marker. If we could break past this, then essentially our next levels above this will probably be looking at, on the range of 4,550, and then essentially going up to 4,600. So that's where my take is, though, that I think that we're probably getting to that point. where it's almost time for us to have a pullback. Now, I want to do some other cool things on here for everybody to like just go through something with TradingView. So on TradingView, one of the cool things that you can do is you can use this thing called the info line. And on the info line, you can draw it from one point to another and it'll give you some data. So if we look at, say, for example, when we call the top from here all the way down to the bottom, we were at 5.7%. Now I'm going to draw some just off of the top so that way you can kind of get a glimpse of, what is it that we're seeing. So then we have a 4.6, and then we have a 2.4, and then we had a pretty much a 3.5, and then as of recently we had a I'm not gonna give it that much, probably like about a 2.7, 2.5. Now this is a very, very interesting thing because if you notice, it's like we haven't really had those strong that strong of a correction that comes all the way to 5% really since May 14th. That's when everything kind of like just died off, and now we've just and every single significant dip, especially when we go beyond or when we get to the 50-day EMA, the S&P 500 tends to find a significant amount of buyers that are ultimately just buying the dip. So you've been hearing buying the dip for quite some time now. And so essentially what you're probably going to start seeing is that we're getting a little bit to the exhaustion period. Now, never fret because it's the S&P 500. So one of the interesting things to keep in perspective is that, okay, let's pull up the ticker that everybody was thinking was the first ticker, was Amazon. Now, for those of you that saw this on my Twitter account, it's like you kind of get where I'm going with this, but I'm going to just take you through it really quickly. It's already been drawn, so I'm going to leave it up there. So here's the thing to look at. When looking at, say, for example, Amazon, look at how, say, for example, we dropped 16%, but then we climbed back up to a 23% gain. So not only did we wipe out exactly where we were here at the 16, but we went even higher. Then essentially we corrected again to 12%, and then essentially we again ran higher. So we're starting to notice this trend. Now, of course, this is kind of like a simple mistake here, but essentially we went up by 21% and now we're down 16.3%. Notice anything here? So the question is, what's the next marker and over what period of time? So my best guess for Amazon is in just looking at the ray of exactly how is it that it tends to trade following. Just looking at that, and you can kind of start putting together simple patterns to see exactly, okay, hey, this is what the market has been giving you over a course period of time. Is it a perfect science? No, it's not. But it's kind of giving you an idea of what Amazon's trend tends to be once it goes through a correction period. Another thing to look at is, this is where we start looking at the volume. Because now we've seen that, okay, Amazon reported its earnings, and then essentially we had a drop, and its earnings has normally stemmed pretty much the start of it going into correction. Then after that, like, let's look at it from this span. I'm going to delete this part of the chart, and I'm going to delete this one. So that way I can create some space. So from this earnings, so going from earnings all the way to here, we're talking about a matter of 30 days. So over a 30-day period, we just saw pretty much Amazon literally just go from height of the world to literally dropping. Now, of course, everybody's like, hey, does Amazon normally do something like this? Good question. Because when we look at it coming out a little bit further, no, that's typically not Amazon's mantra. Normally when Amazon reports, it typically goes higher, continues to keep running, and then essentially it comes down. Now, of course, this was in March, but you kind of see the same thing. Now, if we look at it in perspective, again, still came down to about 12.8%, but take into consideration this is April. And normally what we see in April, for most of your big cap tech stocks, it's normally a time where you see an overwhelming amount of selling that takes place, pretty much going into correction. So
I have a question, Mark.
Yep.
About that chart. Someone's asking, what's the average time it takes for gaps to fill?
The average time that it takes gaps to fill, I mean, it it could be a wider range. It's never really a complete exact science as it pertains to when a gap will fill. It's just a matter of when is it getting to a point where it's at a level and where buyers are willing to buy at. And then essentially, like, for example, you could see on who's to say that if Amazon reaches, say, for example, 33 or 3,400, that the stock doesn't fill this on an entire candle to fill this gap from this to that. I mean, we've seen that where, for example, if Amazon reports on earnings, having a candle that literally drops it, this is a matter of 35.25 down to 34.67, and then the day after that, 34.80 all the way down to 33.89. So pretty much almost about a 100-point move. So it just depends and it varies based upon the stock.
Okay.
So there's some other things that I wanted to do here. There's this thing called buy and sell signals. And so what I'm using is on here is buy and sell signals using EMA, stochastic, and pivots. Now, here's the thing about stochastics, and we're going to get into this probably over the next set of episodes where we start talking about some of the stochastic indicators, because I believe that stochastic indicators is one of the most accurate indicators that you can use on the market that gives you some very good data that allows you to make good decisions on being able to pick your entry points and also possibly being able to spot your exits. Let me explain. Let me break it down. So here we have at the bottom, right? And I'll make it bigger here. So don't fully pay attention here, but I mean, if you want to, God bless. But, let's just pay attention to the thing at hand. So I just removed a lot of the pieces. So we're just going to focus on like some of the elements here, which is our buy and sell signal or buy and sell volume. So here you can kind of get an idea of, for example, when it's red, we start to see the strength of the red. So which is letting you know that this is the volume action of, say, for example, those sell signals. Now it's like you can also start to spot when you also see those crosses from where we go from bullish to bearish. So for example, if we zoom in here, we're seeing that Amazon over the past 2 days, of course, it's signifying that essentially there's a lot of buyers volume that's coming through on the stock. So of course we see it here in the sense of how much volume has been traded for, say, for example, on the buy side versus the sell side. And it's very indicative because when you look at here back where we had this major sell-off for Amazon, look at that. We saw pretty much practically no buying here. So essentially over about 9.2 and then 4.2 million shares that were traded here. But then at the same token, you probably had about maybe 1.9 million shares traded in Amazon or bought in Amazon. And as you can see, we had these huge upswings that ultimately were telling us that essentially that we've just crossed over and now we're getting ready to go into a bullish manner. So you can kind of start seeing it where also you're starting to see where the life of it is starting to subside a little bit. So here, where we see Amazon right now, the question is not about being able to quote unquote predict the market, but being able to use this as a beautiful indicator to spot and say, okay, hey, there's not a lot of sellers activity here. There's much more buyers activity here. So essentially, what will tomorrow look like? We will probably see a little bit of exhaustion or maybe some flatness, but then essentially it's probably showing that Amazon's looking to come up out of this correction territory, at least up here to the 33.98 or 3400, and then essentially probably make some choices. Now be careful because some folks could possibly look at this as what we call a dead cat bounce. And so when you see a dead cat bounce, it's pretty much where the market kind of like shows you that, okay, hey, we're going to go up to the upside, but yet it's more so like a head fake where we're going back down and there's more pain ahead. So in order for that to happen, we need to see Amazon get to a specific level, which is really at the 3,400, which therein triggers us to go ahead and fill the rest of this gap. So just to be on the lookout here, something to pay attention to when it comes to Amazon. Now let's look at some of the stock tickers that we had on, say, for example, the chart for our mystery.
Well, wait, Mark. Wait, we're not done with Amazon yet.
We're not?
No, question. Well, because we looked at the technicals, but now like if we look at potential I'm gonna say potential in quotes, potential threats, Walmart making their announcement about their local delivery service, those two are always going at it. Like, how do you see that impacting Amazon? And then we looked at the technicals, but like what catalysts are we keeping an eye out for when it comes to Amazon?
So the things that you want to look out for when it comes to Amazon is you definitely want to pay attention to, really, I don't think that Walmart is really that big of an issue towards Amazon. I just strongly believe that. I think that the things that to look for, and it's kind of funny because I mentioned this to somebody earlier today, where it's just like, Amazon's doing their very best to show that they are not a monopoly. And I think that they're building a very big case for them to say that, okay, hey, we're not very much a monopoly, because especially when you look at it on the e-commerce side, look at the competition that Amazon faces. You got Walmart, which is technically the largest retailer in the country, probably in the world, or probably second to Alibaba.
Yeah.
And then on top of that, you also have, say, for example, Shopify, which is becoming quite the force within itself on the
Yeah.
e-commerce side as well, taking up either small, medium-sized businesses, some of those same things that Amazon does, along with maybe even working with some of the other larger retailers in the space. So now it's giving Amazon a lot more, say, for example, leeway to say, all right, well, hey, we're not as a monopoly as you think I am. But then at the same
Mm-hmm.
token, on the flip side, it also makes Amazon look a little bit more vulnerable as well, because of the fact that people are starting to see that there's other opportunities for, say, for example, somebody to come in and take Amazon's lunch. Now, will that happen? No. Maybe on the e-commerce side, but really on the e-commerce side, and we did this back in season one, where we did a
Mm-hmm.
breakdown of all of Amazon's revenue and where does it come from. And through that, you were able to see that Amazon was significantly dominant within the cloud space and moving into other spaces associated to the cloud and building their services around that. And honestly, e-commerce was just one of the things that just happened to be around that in that nucleus of services. So honestly, um, that's where I would say fundamentally, there's nothing wrong with Amazon at all. I think that one of the biggest things that Amazon has been doing throughout this entire year, though, is kind of like playing the field like everybody else is, which is, hey, we don't know exactly how Delta variant is going to impact, say, for example, goods and services for our customers, and that could potentially impact as it pertains to sales. So those numbers
Mm-hmm.
could come in. They can come in a little weak and also possibly hinder some of those revenue numbers. But outside of that, I mean, honestly, Amazon's not. I mean, if you think about it fundamentally, when you've had over five, or I think it's like five back-to-back quarters of $100 billion in revenue, you're okay. You're okay.
You're definitely sipping. It might not be water.
I don't even know if you're sipping at that point. That's not even a bag. That's a briefcase. That's a suitcase. So, all right. So, can I move on?
Yes. Yes.
All right. So, one of the stocks that I wanted you guys to look at is a stock called ADP, Automatic Data Processing. Now, if you think about it, a lot of this stock is very much so incorporated and influenced by some things. So, something for everybody to pay attention to, because why? As we start getting into a space where we start to see employment numbers get better, paychecks, ADP, those type of companies, they provide a lot of this data. And ultimately, essentially, when you start seeing an economy that's doing better, where people are not worried, then essentially you're going to start seeing this company and companies like it do exceedingly well. Now, just to put it into perspective, just so that way we're all on the same page and we're all friends here, this is ADP's chart over the last year, or just over this year to date. Here's what it looks like on a year basis, so not much has changed. And on top
Mm-hmm.
of that, here are we when it comes to looking at it over its extended period. So this goes all the way back from 2016 when it went IPO, and taking us all the way to, say, for example, where we are here. Nothing but solid rock star here. So something to pay attention to. And it's
I'm
and it's
not
a,
seeing it.
huh?
The chart. I don't see the chart.
Oh, my bad. I'm sorry. See, this is what happens when I go into like deep mode.
Mm-hmm.
So ADP, this is what it looks like on a 5-year basis. Just nothing but on fire. Now, it's always predicated based upon economic numbers. So if you look at ADP, and I hope that you're pulling it up at home, if you see it, then you can kind of like get this chart. And when you get the chance, I want you to apply this and then also pull up an unemployment chart. And so it's showing that as the numbers for the unemployment go down, as it pertains to signifying economies getting stronger, then look at ADP in congruence with it. And then as we see, like for example, back here where we saw that economic numbers were going to take a dip, it was definitely indicative of that. But make no mistake about it, ADP was definitely doing its thing and was completely on fire long before 2020 came about. So it's something that I just want you guys to put it up and just check out and see, okay, hey, this is pretty cool. So just bringing it in a little bit and showing some data. Let's put some data points on here, shall we? So as you can see from its high and all the way down to its low, ADP has now corrected about 10%. Now the interesting thing is ADP has now gone through this process of also retesting, coming back to retest those lows. So if that's the case, now a lot of things are predicated based upon where we're going. So I'm seeing that folks are saying that they can't see the chart. So if you can see the chart.
No, they can see it now. They can see it now.
Okay. I'm just trying to make sure that we're all good here. All right. So the interesting thing about ADP is, like I said, it's very much so tied to the economics here, especially whether on a domestic as well as sometimes global economy, because just like how our central bank also, say for example, isn't just tied to the United States, it also looks at what the other central banks around the world are doing. ADP looks at those numbers based upon a domestic forefront, but also takes into consideration because it doesn't just do business here in the United States. So just something to be on the forefront of. All right. So the other company that I wanted everybody to pay attention to is TSM. So if we pull up TSM and we have it sitting here, we're going to pull it up from, now TSM has had an ugly chart. Now the interesting thing is if I did a comparison and showed it just like, say for example, Alibaba, then you'll notice that they're pretty much very much so indicative of each other, where it's very much tied to not what the company is doing, but more so in the sense of how is it that China's government has had a huge impact on the stock. So something to be mindful of. And now the question is pretty much are we still seeing more pain ahead, or is this pretty much, are we done? And so I think that when U.S. equities, here's a secret: when U.S. equities get so expensive, people start to look towards other areas, especially developing economies or global economies. And one of the things that they look at is either developing countries, so check out ticker MSCI if you get the chance sometime, or look at, say, for example, a lot of China stocks. So, for example, if you see that U.S. tech companies are becoming so expensive, then 9 times out of 10, what you'll probably see is you'll start seeing a hedge move over into, say, for example, their Chinese counterparts, because now they look so cheap. Another thing to pay attention to is also focusing on the US dollar as well. Because if we have a strong US dollar, then US equities start to look at as expensive, or say for example, too strong. So you go to other areas in which that they aren't as strong. Again, it's a balancing act. Imagine if I had a cap on my bottle and I was just running the water from one side to the other. Sooner or later, it's kind of like the water flows, but then it comes back. So just something to keep in mind here when it comes to TSM. They're a brilliant company when it comes to the fundamentals. They're not going anywhere. They've already solidified 3 major customers, one being Apple, of course, and what they're doing. You also have AMD, which is their second largest customer. And then on top of that, they also have Tesla, which, I mean, we're not going to talk about Tesla robots unless I'm asked. But essentially, that's going to produce even more chips within the space. And honestly, it's just letting you know that business is about to be significantly booming. So something to pay attention to there as well. Okay. So then there was another company. Actually, no, that was it. That was the only other company. The only other thing that we looked at is pretty much the SPY, and I had already answered that. Now, the interesting thing is that I put here is I want you guys to
Mm-hmm.
look at something because this is very much so indicative of what you've been noticing across the market. Does anybody notice anything here on this chart?
There's a delay, so you got to wait.
Oh no,
As you
I'm
said,
pausing for effect.
okay, all right, gotcha.
I wish I could like play the Jeopardy, tune.
I'm doing it in my head. um,
Okay.
yeah, it may be up by now. It's hard to tell.
Yeah, it's up. So here's the thing to look at when we see the S&P 500. So looking at the S&P 500, aka the SPY ETF, notice something. We've been seeing some significant dips, and they've been happening pretty much on a regular, like clockwork lately. So
Was
just
that the
think
night?
about it. We've been clocking in on, say, for example, the 19th,
Mm-hmm.
preferably on every single month. So this is May, June, July, August. We've been clocking it. So essentially we come down, we ping the 50-day every single month in the SPY. That's what we've been doing. So essentially what happens is that we would probably start to dip. So we started to dip on the 10th. We started to dip on the 15th. We started to dip on the 14th. And then we started to dip on the 16th. So if you notice, these things are starting to come a lot faster, like in flashes, so to speak. So we dip, we go back up. So essentially it's letting you know, and here's another thing to look at, is that we have, if we're looking across timeline, so this is 29 days. Actually, no, this is actually 30. So this is 30 days. 31 days, and here 31. So if we're taking that same kind of logic, I mean, of course, just in the sense of just looking at a trend, and if we draw it out to, let's say, 31 days, that would place us at, we should start seeing some of that behavior start to take place on the 29th day, which is, yeah, September 17th, which it's very interesting because that's the week of, if you think about it, that's the week of where quadruple witching takes place. So that Friday, you should probably start seeing a major expirations. And on top of that, you should probably start seeing, probably starting on that Monday, if not that Friday before, where you should start seeing that the market is probably start to top out.
So tomorrow, not necessarily like what plays, but like tomorrow, like what are the top things that we should be tracking, given what we went over today?
Good question. So, what is it that we should be tracking and from today's lesson? Interesting. Because I know I just gave a lot out of, and especially you learn a lot in just like going through 3 charts, which is crazy. We literally went through 3 or 4 charts. One of the things that I want you to do is, when you see a company dip down below its 200-day moving average, that is a moment in which that, especially if you've been tracking and watching this stock, you need to be looking at that as a pure opportunity right there. Like, don't let that go over your head. Take advantage of the opportunity, especially if you've been watching it. Especially if it's a good company, the fundamentals are still in line, and everything else, all things line up, then essentially that's an opportunity that you don't want to miss. So just think about it like this: Mr. Opportunity or Mrs. Opportunity knocking on your door, something that you don't want to let go. Another thing is like, here's a beautiful thing that you can do as a small little cheat code, especially if you're playing, say for example, a lead play. Or I mean, even if you're sometimes swinging, but I'm going to just speak just specifically towards like lead plays. What you can do is you can actually just set your marker at the 200-day moving average if we're below it, and just say, hey, that's where my strike price will be. So I'll set my strike price either on a year long or 2 year long leap play, I'll set my strike price at where the 200-day moving average price is, and then essentially from there, you know, do as you will. So there's a cheat code there, something to definitely be mindful of. I also wanted to share one more thing, if that's possible.
All right, Tim Apple. Just kidding.
I know. Shout outs to that 10-year. Shout outs to those 10 years. I don't know if anybody caught this on the pick list, but I asked, hey, are you going to eat that? And the reason why I asked if you're going to eat that is because I mean it. Ticker EAT, also known as EAT, or Brinker International, was a pick on the pick list. So in the bottom right corner where you say, hey, you're going to eat that, that's actually a ticker. Now, that's up to you to do your due diligence on the company, their fundamentals, and everything else. But just to give you a small little spoiler here.
You should have said taste.
Just ever so small, just looking at exactly how this stock has moved. This stock has been, kind of like moving a certain way, so to speak, since pretty much looking at it from 2018, and then of course 2020 hit, and then of course going back up. So the question is it's actually at flat now of where it once started all the way back in September of 2016. So that's very, very interesting because it's flat over a 5-year period. But take into consideration, this is something in which that you definitely want to pay attention to, especially when we start thinking about things reopening up and what does their business look like. So just something to just be on the lookout. Like, it's not something, like, one of the things that I want people to get to understand is that our goal is to put things on your peer view and to show you opportunity. It's your decision to essentially press the button when it comes to your portfolio and also looking at it. If the data is good, if the thesis is good, our goal is to teach you how to look at things and to put it together in a thesis format, and then essentially formulating your research where you have the tools at your disposal. And then from there, use it towards, okay, hey, is this something that is worth me placing in my portfolio? If not, it's just nothing but a glorified stock that you can put in your watch list just to watch it and track it and use it as an economic indicator towards against the rest of your portfolio as well. So something to keep in perspective. But,
So for those who may be new, that are just now joining us, I saw a couple of new subscribers. Welcome, welcome. What you all can do besides, upon the replays, watch this again, is take all those charts, set up all the indicators that were discussed, and just pay attention tomorrow and track it, and see, how the chart, not the chart, but like see how the company is moving throughout the day, and just see like what you can learn and test your knowledge against what we just discussed now, so that you can enhance your chart analysis.
One more thing.
Two more things. All right.
Since we got cut off, I wanted to kind of share with you, like, how is it that you can spot when we've officially gone bullish in a stock? Glad you asked. So let's look at, say, for example, we'll take one of my favorite stocks. Of course, I had to do it. Actually, you know what? I won't do it. I'm going to actually look at FT&T because, they need some love.
They need a hug today.
They do. It's kind of interesting because the FT&T looks a lot like the S&P 500 stock, but or SPY ETF, but that's a whole nother day. But one of the interesting things is a lot of folks look at the 5-day EMA and say, okay, well, this is how we can kind of like look at it and spot it. No. What you need to look at is this item. This 21, or in some cases, some folks do 20-day EMA. I like 21 or 13, because this kind of lets you know exactly is the trend still being upheld. This just literally just solidifies it and just saying, hey, I got you. But this
Mhm.
right here will tell you and give you confirmation of whether or not we're still in a bullish trend. Now, of course, we saw here today, if I kind of like take the time to zoom in, now notice here, we actually have that we had a cross that took place. Now, these crosses have been like, if you notice, we crossed here and then we crossed here, and this is just a matter of 3 days. So I want you to take that into consideration. But notice here, when we see these moments, it's like, okay, hey, it looks like we've kind of like dipped and it looks like we kind of came back and slightly retested. We're running into some heavy duty resistance here. Like, I want everybody to understand that we're going into some heavy duty resistance when it comes to this, when we come to FTT. But the biggest thing to pay attention to is the trend broken? Is the bullish trend broken? And if the bullish trend is not broken, then essentially it's going to show you that. So looking at the 21 day, it's not broken. It's still pointing towards the upside. Though that we see some of the choppiness here in the 5 day, but don't let the 5 day EMA fool you. Always look at all things considered and then put it together. And notice how it kind of paints an interesting picture for you as you move forward. Now, that's for a whole nother day when we get to that point. So, all right, it's official. I'm done. Be sure to wash your
Okay.
hands. Shout out to, Coach Ed for that, if you remember the Matrix.
I totally remember that. It was hilarious. Okay, let me just review right quick for the charts that we went over. So we went over the SPY, ADP, Amazon, TSM, FTNT, EAT, and then you said look at MSCI. Make sure. I think those were all the ones you covered today.
Yeah, so you look at like the emerging markets,
Mhm.
just to see exactly how is that they're playing out. And it's kind of like it's kind of funny because you kind of see the emerging markets kind of play like a lot like the Russell small cap stocks, small and mid cap stocks.
Mhm.
And typically you see people do that when they need to run to safety. And
Mhm.
then after that, it's like, okay, hey, well, we're back in the swing of things.
Okay, I'm just typing these out, throwing it in the chat right quick. Keep keep us honest here.
Yeah.
Okay, so on my laptop's about to die. So we are back now. I'm kind of liking this new time, Mark.
You're liking it?
I think so.
I would suspect so. I mean, it's good. I mean, I know that we're going to be having those moments where we compete against like other services like Thursday Night Football and all that other stuff. But
Mm-hmm.
hopefully, this show should be good for being able to point it out to you and saying, okay, hey, in black and white, this is where we start to look at it. This is where we start to put it into perspective, and this is where it's like, our fellow cousins can start looking at places in which that they can actually pick their entries and points. That's really where it comes into play. I mean, nothing else, nothing more. Just good old wholesome information. And it's going to be interesting because now we're going to have S&P and friends going where, and so now we're going to have to edit this video to say part 2, and then also have a part 1. So it should be fairly interesting.
Yeah, because I think that it's good to look at the SPY for those patterns and those trends.
Yes.
And then I think it's great to look at it as far as brushing up your skills. It's something you can always come back to, and you should share a chart with a friend.
Yes.
Or a cousin.
So one of the reasons why we're going to do that moving forward is that I want each and every single one of you to start like doing this challenge here. We need to start moving away from I think I spoke about it earlier this year where I said 2021. Here's a quote for you: ignorance is catchy. But one of the things that I strongly believe is that we can change that as a people. Like in the way that we change it from being ignorance is catchy to ultimately being, knowledge is sexy, is I want you to start sending like charts to one another and like, like hide the ticker symbol, and then see exactly if people can actually be able to pull it up without like and know the chart, and also to be able to explain the chart. So
Year to date.
here's I was gonna say, here's the rule: only year to date charts. Only year to date charts. So don't try to like fool people and like, all right, well, we're gonna do it on a monthly and everything else. We'll get to there. Let's start somewhere. So the challenge is, it's pretty much the year to date chart challenge, where pretty much you send somebody a chart, and essentially it's their duty to ultimately get it right. One, what's the name of the chart, or who's the company on the chart, and then also tell us exactly what to expect from the chart. Now, of course, the way that we look at it moving forward is, if you're right, then you can challenge somebody else. And I think that what we can also probably start doing is also doing a point system to see exactly who becomes up in the leaderboards, to ultimately start being able to master charts. Because when you start being able to master things in the sense of not only just recognizing the company and their behavior flow, which changes year over year, by the way, but more so in the sense of understanding exactly like, where should the company, or where do you think the stock is going next, based upon your understanding of fundamentals and your growing knowledge and technical analysis, it should make all of you pretty dangerous. So this should be interesting.
For the kids, for our younger come up cousins, I would encourage you all to, like, when you have kids with you and you're out and about, like, have your children point out all of the companies that they see that are publicly traded. We played that game with Eleanor's kids, and they were so good. They were starting to get really competitive.
I mean, that's a good thing, though. That's a very good thing. Like, so just as a heads up for everybody that wanted to know what it is, it's pretty much buying the indicator that I was using on TradingView is buy and sell signals using EMA and stochastic, as well as I think it also had pivots in there as well. I'm just trying to make sure. Yeah, and it's also pivots. So I'm posting that in the chat. And there's another thing that I wanted to do also, and we'll probably just drop it into the description down below, is we have some books. I will be posting the Amazon link to this. Shout out to our fellow cousin Eli Velez, solid brother who I've had the privilege of meeting through Q, and he sent me this wonderful book where it's pretty much Where Will the Water Come From? It's a good book to look at exactly what water resources look like, and then also water futures, and kind of like getting into the weeds. So if you're kind of like a nerd like myself, then you're gonna love this book. I'll post it again I'll post it this evening in the link down below in the description of this video, so that way you can check it out. And there you have it. And I think the writer of this book also is also a avid come up cousin as well. So interesting. So you never know, we may be able to get them on the show. And just to keep everybody up to date, I can't really talk about the surprise yet for somebody in whom which he will be completely ecstatic to who that guest will be. But what I can say is we will be having a guest coming in from Loop Capital, one by the name of Mrs. Sydney Dillard of Loop Capital, one of the chiefs there. Very phenomenal individual. You'll be seeing her this month before we close out. And of course, you never know who else is coming to the stage, but be on the lookout there as well. So yeah.
All right. 1 minute over. It's all good.
My bad, y'all. Sorry. Sometimes I talk a lot. Sometimes I give a lot of gems and I give too many extras. But Jolynn, it's been real.
Yeah.
But
yes, it has
been real.
Thank you. They're always a scholar.
Always scholarly. He's like the one that sleeps in class all the time. Until next time, y'all, I am Mark Monroe.
And I'm jolyngc, and the place to be.
And this was your come up. We hope you enjoyed it. Be kind to other folks. Keep researching, keep learning, because the more you learn, the more you earn. We'll see you in the next one. Peace, y'all.